Be Wealthy and Smart, episode 1160.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to look at the question, are supply chains and inflation improving? This is something I'm not really hearing a lot of people talk about. Maybe you have, but I really haven't. And I came across a report about supply chains and what's going on from a big retailer's perspective. And I thought this would be an interesting topic for us to talk about because so much of what we're focused on with the stock market and the economy is focused on inflation. And while we know a lot of inflation has come from energy prices, and some of that due to the war in Ukraine and the sanctions, etc., some of that also is due to supply chain disruptions after the pandemic. And so we want to sort of get a handle on that and see how are we progressing along that supply chain problem. And as we work through some of those supply chain issues, that should help us relieve some of that inflationary pressure. So I ran across an article on wealthmanagement.com, and it says, supply chains have healed, yet their mark on inflation to endure. Big retailers and manufacturers may not be seeing enough shipping rate reductions yet to warrant slashing prices further. And here's the report. Supply chains across the world are healing up almost as fast as they broke down. That doesn't mean the pressure they're exerting on inflation will disappear as quickly. Take the cost of shipping containers. Spot rates from Asia to the U.S. West Coast increased more than 15-fold during the pandemic and have since returned to pre-COVID levels as trade between the world's two largest economies cools from a frenzied pace. But the relief is uneven. Short-term prices for containers from Europe to the U.S. East Coast are still more than double what they were in late 2019, according to data from Freightos Limited. What's more, an estimated 70% of goods transported in steel boxes on giant ships do so under long-term contracts, not the spot market. And those deals were renegotiated in 2021 and 2022 at much higher rates. Big retailers and manufacturers may not be seeing enough shipping rate reductions yet to warrant slashing prices further. Jason Miller, an associate professor of supply chain management at Michigan State University, said we need to be cautious about the drop in spot prices for containerized freight. Most freight moves under contract prices that are still well above pre-COVID levels. Such stickiness may help explain why inflation in some regions remains stubbornly high. U.S. producer prices rebounded in January by more than expected, underscoring persistent inflationary pressures, and another closely watched gauge of consumer costs came in hotter than forecast on Friday. In the euro area, underlying inflation hit a record in January, revised data showed last week. Another reason the cost of living is slow to fall. It's easy to underestimate how long it can take for inflationary trends to work through supply chains. That's partly because companies don't like to change their pricing more than a couple of times a year, according to Chris Rogers, head of supply chain research at S&P Global Market Intelligence. Whilst the underlying prices have been coming down, it could take quite a long time for that to feed in. We're still seeing some of the inflationary hangover coming through to product pricing now, and it could take much of the rest of the year for that to flow through to prices, whether it's producer or consumer, Rogers said. There are also some temporary factors at play now. In order to clear backlogs of inventory built up during the pandemic surge in consumer demand, many companies cut prices in the second half of last year. But now, many firms are facing enduring increases in one of their biggest costs, which is labor. Worker shortages are hitting the supply chain industries hard, said Nicholas Sly, Vice President and economist at the Federal Reserve Bank of Kansas City. There are several parts of the logistics sector that are actually quite labor-intensive, Sly said. Drivers make up a very notable part of this, but warehousing also requires a lot of workers. It's time-consuming and costly to train new employees, and that drag on productivity only adds to costs. On top of higher paychecks, other basic costs of business have risen. Long-distance motor carrying is one sector that's not anywhere near pre-pandemic levels, according to Michigan State's Miller. Higher costs for diesel, industrial equipment, and major capital expenses like new and used trucks still abound. The cost to make truck, trailers, and chassis, for instance, remains elevated, according to data compiled by the St. Louis Fed. Driver wages have increased substantially, and so have maintenance charges on all modes of cargo transportation. Miller said, across the board, you have higher costs, so that's going to have to translate into higher freight rates. We may have seen ocean spot rates come back to their pre-COVID levels. We're not seeing that in domestic truck transportation. We're not seeing that in domestic rail freight prices either. Nor have storage costs seen any kind of sustained declines. Warehouse Quote expects warehouse storage pricing to continue growing this year, owing to industrial real estate rents and labor cost increases, and as vacancy rates remain below historical averages. Even so, the easing of some supply chain strains means logistics issues are contributing far less to inflation than services, according to Fleetport Inc.'s chief economist Phil Levy. In the U.S., consumer inflation data earlier this month showed commodities, excluding food and energy, rose 1.4% from a year earlier, a rate that should give Federal Reserve officials some comfort that their policy tightening is having an effect, given they target annual inflation of 2%, albeit using a separate measure. But services inflation minus energy services is running at 7.2%. Levy said, what we've had is something of a handoff, where it went from really quick spiking goods inflation to a big drop in the amount that's coming from goods. It's not every single component of the supply chain that has moved in lockstep, but things have let up quite a bit. In the latest wave of earnings reports, U.S. retail chiefs highlighted improvements in logistics pressures, but the price pain isn't necessarily over. While the supply chain issues have largely abated, prices are still high, and there is considerable pressure on the consumer, Walmart Chief Financial Officer John David Rainey said in a conference on Tuesday. Economic headwinds from prices are continuing for now, though that may change later in 2023, said CEO of Bath & Body Works Gina Boswell. We expect that we will continue to see inflationary pressure on our input costs in the first quarter before beginning to see some relief as we move through the year, she said. End of article. Yeah, so a lot of the economic pressure that I've been seeing was expected to be in mainly the first quarter of this year. As we move through the first quarter, I think we're going to see things start to improve. And we're hearing some of those comments reflected by the people quoted in this article. Are things getting better in supply chains? Yes, but they're not dramatically better yet. But they're starting to show signs of improvement, and that's what we really need to see, is things just getting a little bit better, and eventually things will be more on a normal path. But right now, things are still strained, supplies are still under pressure. But as long as things keep moving in the right direction, I think once we get through the first quarter, then we can look and see what kind of progress is being made, and if we've made some improvements. As the saying goes, how do you eat an elephant? One bite at a time. So these things take time. They're big projects, things that move slowly, but step by step or bite by bite, we'll get through the challenge and things will begin to improve. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are available in my wealth mentoring library on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.